If you are holding Palantir right now, this video is specifically for you. Not for the people who are thinking about buying it, not for the people who've never touched it, not for the analysts writing reports about it from the comfortable distance of a spreadsheet. This is for the people who are actually in it, who have real money on the table, who have watched the price do what it's been doing lately and felt something in their chest that they're not entirely comfortable with. I want to speak directly to that feeling today. And more importantly, I want to reframe it completely, because I believe that feeling as uncomfortable as it is actually pointing you towards something important. Something that most investors spend their entire careers trying to find and almost never do. But before we get there, I need to make something very clear up front. What I'm about to share with you is not a prediction. It is not a buy signal. It is not financial advice of any kind. What it is a framework. A way of thinking about what it means to hold a position in a company like Palantir during a moment like this one. And I believe if you genuinely absorb what I'm going to walk you through in the next 20 minutes, you will leave this video with something far more valuable than a price target. You will leave with clarity. And in markets, clarity is worth more than almost anything else. Let's get into it. Here's what I've noticed about the way people talk about difficult moments in markets, and I've lived through enough of them now to have a very strong opinion about this. They're almost always imprecise about what they're actually afraid of. When a stock drops, when something you own goes from here to here on a chart and the comments fill up with anxiety and the group chats get loud and everyone starts posting the same 3 bearish articles, what people say they're afraid of and what they're actually afraid of are almost never the same thing. What they say, I'm worried about the fundamentals. I'm worried about competition. I'm worried about the macro environment. What they actually feel, I don't know if I was right. And if I was wrong, I don't know what that means about me and about my ability to make good decisions in the future. That's the real fear, not the stock price. The story we tell ourselves about what the stock price means. And I want to sit with that for a second because I think it matters enormously. Because here's the thing about that fear. It is not an investing problem. It is a psychology problem. And investing problems and psychology problems require completely different solutions. If you have an investing problem, if the actual fundamentals of your thesis have deteriorated, if the reasons you originally believed in a company are no longer valid, then the discomfort you feel is information. It's telling you something real, and you should listen to it and act accordingly. But if you have a psychology problem, if the thesis is intact, if the reasons you believed in the company are still there, if the only thing that has changed is the price and the narrative around the price, then the discomfort you feel is not information about the company. It's information about you, about the gap between your conviction and your composure. That gap between conviction and composure is where most wealth is lost, not in bad picks, not in bad timing. In good picks held badly. So the first question I want you to sit with today, before we go anywhere else, is this: which problem do you actually have? I want to talk about something that I think is genuinely underappreciated in the way most people approach investing. And it's this. Being a shareholder in a company is not the same thing as owning a ticker symbol. I know that sounds obvious. But stay with me because I don't think most people actually operate this way. And the gap between understanding it conceptually and actually internalizing it is enormous. When you buy a share of a company, what you are doing, in the most literal and precise sense, is purchasing a fractional ownership interest in a real operating business, in its assets, in its future earnings, in its people, in its positioning, in everything that business is and everything it has the potential to become. The price on the screen, the number that updates every few seconds during market hours and that causes people's blood pressure to spike and their judgment to dissolve, that price is not the company. It is the market's current best guess about what that fractional ownership interest is worth to a buyer today. And the market's current best guess is not always right. In fact, historically, in the short term, it is often dramatically wrong, in both directions. It overshoots to the upside when sentiment is euphoric. It undershoots to the downside when sentiment is fearful. And then over time, it corrects back towards something that more closely approximates reality. This is not a controversial observation. This is something that essentially every serious investor, from the value camp to the growth camp to the macro camp, agrees on at the level of theory. The disagreement is almost always about what reality actually is and how long the correction back toward it takes. But here's the implication of this that I want you to really sit with, specifically as a Palantir shareholder right now. If you bought Palantir because you believed in something about this company, about what it does, about who it serves, about the nature of the problem it solves and its competitive position in solving that problem, then the question you need to be asking yourself right now is not what is the price doing? The question is, has the thing I believed in changed? Instanturicentias crinderi, estantia. That's it. That's the whole question. If yes, if the thing has changed, if the belief has genuinely deteriorated based on new information about the business itself, then the discomfort is a signal and you should act on it. If no, if the belief is intact, if the fundamental story you told yourself when you made the decision is still coherent and still supported by the available evidence, then the price movement is noise. Uncomfortable noise, but noise. And your job, your specific job as a shareholder, is to not confuse the noise for the signal. Now, I want to talk about something specific to Palantir that I think most people either don't appreciate or actively avoid thinking about. And it's this. Palantir is a controversial company. It has always been a controversial company. And I mean that in a very specific structural sense, not as a criticism. The companies that end up mattering most, the ones that looking back you wish you had held through every difficult moment, are almost never the companies that everyone agrees on. The companies that everyone agrees on are consensus. And consensus, in markets, is almost by definition already priced in. The companies that generate the most disagreement, the ones that have loud, credible, well-articulated bear cases sitting alongside the bull cases, those companies create something that the consensus companies cannot: genuine mispricing opportunities. Because not everyone agrees, and because the disagreement creates volatility, and because volatility creates fear, and because fear creates selling, sometimes at prices that don't reflect the underlying reality. Now, does controversy mean the bull case is right? No. Controversy is not a guarantee of anything. There are controversial companies where the bears are correct and the business genuinely deteriorates. The controversy alone tells you nothing. But here's what it does tell you. If you are holding a controversial company, you signed up for this: the volatility, the loud bear cases, the moments where prominent voices, with credible track records and real audiences, make compelling arguments against your position. That is not an anomaly in the Palantir story. That is the Palantir story. It has been since the beginning. The question was never whether these moments would happen. They were always going to happen. The question was whether, when they happened, you would have built enough of a genuine intellectual foundation to hold your ground, or whether you'd be making decisions based on whoever made the most compelling YouTube thumbnail that week. And I say that not to be dismissive of the bearish arguments. The best bearish arguments deserve to be taken seriously. They deserve to be evaluated honestly. I actually believe that the quality of your conviction about a company is proportional to how seriously you've engaged with the best case against it, not how many times you've read the bull case. If the only arguments you've been consuming are the ones that confirm what you already believe, then your conviction isn't conviction. It's confirmation bias. And confirmation bias is not going to hold you through a moment like this one. Real conviction is what survives contact with the best counter-argument. So, if you're a Palantir shareholder right now, have you done that work? Have you genuinely engaged with the strongest version of the bear case? Not to be convinced by it necessarily, but to understand it well enough to evaluate it on its merits. Because that's what get ready actually means, in my view. Not get ready to buy more, not get ready to sell. Get ready, intellectually and emotionally, to make a real decision based on real thinking. Let me put this current moment in a broader context, because I think the historical perspective is genuinely useful here, not as a comfort blanket, but as actual information. Markets have a very consistent pattern when it comes to companies that operate at the frontier of something genuinely new. The pattern goes roughly like this: early period of extreme enthusiasm, often driven by narrative rather than demonstrated fundamentals. then a period of harsh reassessment, sometimes triggered by macro factors, sometimes by competitive concerns, sometimes by nothing more specific than a change in sentiment, where the company gets priced as if the early enthusiasm was entirely misplaced. Then eventually, if the underlying business continues to execute, a third period where the market catches up to the reality that the business has been quietly building toward all along. This pattern has played out with remarkable consistency across every major technological transition I've studied. The specific companies change, the specific bear cases change, but the underlying structure of the narrative arc is almost identical. And the people who get wealthy across these cycles are not the ones who timed every phase perfectly. That's a fantasy. Nobody times every phase perfectly. The people who get wealthy are the ones who did enough intellectual work during the period of harsh reassessment to hold their position, and then benefited from the third phase, the catch-up, that their conviction had earned them the right to experience. Being a Palantir shareholder right now means you are, most likely, somewhere in the middle of a period of harsh reassessment. The macro is uncertain. The narrative is complicated. The voices are loud on both sides. The price reflects a level of skepticism that may or may not be warranted. The question, the only question that actually matters for your specific situation, is whether you've done enough work to know which side of the argument the evidence supports, and whether you have the composure to act on that knowledge rather than on the noise. I want to spend a moment on the dissenting voices, because I think the way most investors relate to people who disagree with them is actually deeply counterproductive. When a prominent voice comes out with a strong bear case on something you own, the instinct, and I've felt this myself many times, is defensiveness. It feels like a personal attack. It feels like someone is trying to take something away from you. And so the response is to find flaws in their argument as quickly as possible, to dismiss them, to look for reasons why they're wrong before you've really engaged with the possibility that they might be right. That instinct is understandable, but it is not useful. Here's how I've learned to relate to dissenting voices instead. And this shift in orientation has made me, I believe, meaningfully better at holding through difficult periods. I treat every credible bear case as a gift. Specifically, it is a gift of clarity, because a well-articulated bear case forces me to confront the weakest points of my own thesis. It identifies the assumptions that are load-bearing. It highlights the things that would have to be true for my investment to work out, and the things that, if they turned out differently than I expect, would mean I was wrong. If I engage with that honestly, if I really sit with the strongest version of the argument against my position, one of two things happens. Either the bear case identifies a genuine flaw in my thinking that I hadn't previously confronted, in which case I should update my position and I should be grateful that someone helped me see it before I found out the hard way. Or the bear case on honest evaluation doesn't hold up against the actual evidence, in which case my conviction just got stronger, not weaker. Because I tested it and it held. Either outcome is better than defensiveness. Either outcome is better than echo chambers. So my strong advice to every Palantir shareholder right now, and this applies regardless of what you ultimately decide about your position, is this: find the best bear case you can, not the weakest one. Not the one that's easiest to dismiss. The best one, the most serious, most credible, most evidence-backed version of the argument that this investment is wrong, and then evaluate it honestly, not to be convinced, to be tested. If your thesis survives that test, you'll hold with a clarity you didn't have before. If it doesn't, you'll exit with a clarity you didn't have before. Both of those outcomes are vastly superior to the alternative, which is holding or selling based on anxiety rather than analysis. So, the title of this video is, if you are a Palantir shareholder, get ready. And I want to be precise about what I mean by that. I don't mean get ready for a specific price level. I don't mean get ready to buy or sell at a specific moment. I mean something more fundamental than any of that. Get ready means build the internal infrastructure you need to navigate what's coming. Because here's what I know with certainty about Palantir, and this has nothing to do with whether the stock goes up or down from here. It is not going to be boring. There will be more moments of this kind, more bear cases, more periods where the narrative is uncomfortable and the price is moving in the wrong direction and the comment sections are filled with anxiety. This is the nature of owning a company that operates at the frontier of something genuinely consequential. The frontier is not a comfortable place to be. It never has been. The investors who will look back on this period with satisfaction, not just the ones who make money, but the ones who genuinely understand why they made or lost it, the ones who grew as investors through the experience, those investors are already doing the work. Right now, not waiting for clarity from the market or from some YouTube channel. Building clarity from the inside out. That's what get ready means. Build the framework that lets you face the next uncertain moment without losing your compass. Stress test your thesis against the strongest arguments against it. Know with specificity what would change your mind and what wouldn't. Understand the difference between a business getting disrupted and a narrative getting disrupted, between price risk and fundamental risk, between being early and being wrong. These distinctions, made in advance with calm and careful thinking, are the difference between a shareholder who holds intelligently and a shareholder who holds blindly. And in a company like Palantir, that difference is going to matter. Before my closing thoughts, a few things quickly. First, I've put together a thinking framework specifically for moments of maximum uncertainty, the periods where the noise gets loudest and the signal gets hardest to hear. It's a structured set of questions designed to help you evaluate your own conviction honestly and identify whether what you're feeling is information or just emotion. It is completely free and the link is in the description. I'd encourage you to work through it slowly, not in 5 minutes, but seriously. Second, if you want to go deeper on building the kind of long-term investor mindset that makes these moments navigable rather than paralyzing, I've built a community of people who are committed to exactly that. Serious thinkers, long-time horizons, real intellectual engagement with hard questions. You can find the details in the description as well. And third, if this kind of conversation is useful to you, subscribe. Because there will be more moments like this one, and I intend to be here for every one of them. Let me leave you with this. The title of this video is about being ready, and I've spent the last 20 minutes trying to explain what readiness actually means, not in the sense of having the right position size or the right entry point, but in the deeper sense of having the right internal architecture. Here's the truth that I keep coming back to. After everything I've observed across decades of watching how markets work and how investors behave inside them, the companies that generate the greatest long-term wealth are almost never the companies that were comfortable to hold throughout. They were the companies that demanded something from their shareholders: patience, conviction, intellectual honesty, the willingness to hold a thesis under pressure and evaluate it fairly rather than react to it emotionally. Palantir is demanding something from you right now. It has been for a while, and it will continue to. The question is not whether the demand is fair. Markets don't do fair. The question is whether you've built the capacity to meet it. I believe you can. I believe most of the people watching this can. Not because the investment will necessarily work out exactly as hoped. Nobody can promise that. But because the process of building genuine conviction, of doing honest intellectual work in the face of real uncertainty, makes you better regardless of the outcome. That's the work. That's always been the work. Get ready. I'll see you in the next one.